and we continue our detailed market coverage. Here's another global market voice telling you he doesn't believe there will be a double dip. Listen in to Mark Mobius.
The only problem I see with you is that I'm going to ask you about places where you're probably not investing because they're not, where the growth is. So I mean, can you even comment on the trouble spots, or are you just where all the action is?
It's true. We're in these great emerging markets that are growing 3, 4, 5 times that of the U.S., Japan, or Europe. So there's no question that we're focused on emerging markets. But I think you've got to not forget some companies listed in the U.S. and the U.K. and the European markets that are emerging markets exposed. And those are the companies you might want to look at, but frankly, there are very few of those.
Do you have a macro view, Mark, on whether, where the developed countries, how the recovery plays out? And do you have any worries that even in your markets, if it doesn't play out well in the developed countries, that it could eventually come home to roost where you're playing?
My feeling is that the talk of double dip doesn't make sense. With the kind of money supply that we have and that continuing, as you know, this quantitative easing continuing, there's not going to be a double dip. There's going to be a continuing recovery in the U.S. and in Europe. And already you're seeing this in Germany, for example. With the weakening of the euro, Germany is again becoming an export powerhouse, exporting all around the world. And, of course, that affects emerging markets like I'm here in Poland. Poland will benefit from that development in Germany. So I'm quite optimistic about the outlook.
Are you playing in the frontier markets as well, or just the solid, the bona fide emerging markets?
The frontier markets are really exciting. In fact, among all the funds that we manage, the Frontier Market Fund is the best performing. We're looking at countries like Nigeria, Kazakhstan, Ukraine, Vietnam, and a whole list of incredible countries that have very cheap stocks. That's the bottom line.
It's amazing that we, I guess we're so centered here with where we are, but it seems like we need that these countries need us to play and to buy all this stuff. So you would have to have, you have to still consider Europe and the United States and what the prospects are there before you can make too much of a conclusion or come to much of a conclusion about these other places.
Absolutely. And I think one of the things that's forgotten in the U.S. and in Europe, and particularly in the U.S., is that these countries have incredible amounts of foreign exchange reserves. And it's not only China. It's India, it's Brazil, it's Russia. Let these people invest in the U.S. They are eager to invest in U.S. companies. Now, I realize there's concerns about security, about ownership by foreign companies and so forth. But we had that problem, if you remember, when Japan was buying up America, and not too long after they had to sell back at half the price. So I think this is something you've got to keep an open mind on and allow these countries to come into the U.S. And it's not only trade. It doesn't have to be a one-way street. The U.S. is a great exporter and will become an even greater export if they allow this market to move and to open. So the fewer the restrictions, the better.
Mark, every morning we walk in here and everybody's frustrated by the slow pace of job growth in this country, stubbornly weak retail sales. And meantime, Australia's booming, South Korea's raising rates, Canada's creating lots of jobs, and it's bubbled up once again the argument or the notion of decoupling. Is it possible that the U.S. is not just late to this global party, but just doesn't show up at all?
Well, I think there's a decoupling in philosophy. I think the problem in the U.S. now is that there's so many restrictions on small and medium-sized businesses, and the tremendous burden of additional taxation is putting a damper on growth in employment. And this has to be addressed very, very urgently because a great opportunity is being missed, in my view.
Yeah, it's going to be addressed in November. Most likely. I was going to ask you about that, and not just here, Mark, but the one thing that the crisis did do is push the pendulum back, I think, away from unfettered free markets and less regulation and lower taxes. And I wonder how long does it take for the pendulum to stop at least moving that way?
That's the problem, and it's really interesting. You know, if you look at Obama, he is incredibly popular overseas in all the emerging markets. But if you look at the philosophy that underlines his economic programs, emerging markets are moving in the opposite direction. So it's really something that has to be addressed. And I hope that in the election there is a change in that sense, where there's a realization that you have to encourage small and medium-sized businesses, and you've got to eliminate legislation that restricts business.
What do you mean? I mean, what are you seeing in that? You know, that's hurtful as well. That you know, that these I don't know what, I'm not going to disparage these smaller countries. They get it and we don't, Mark? That's what you're saying right now? They're moving in the right direction and they're doing the right things. These, what Banana Republic.
You don't want to disparage them, but these Banana Republics.
I mean, that's hurtful. Here we are, the greatest country in the world, and they're showing us the way as far as the economy goes.
You must remember where they came from. They were socialist, they were communist, they had lots of restrictions, they didn't allow foreign investment to come into their countries, they didn't have capital markets, and they woke up to the reality that unless they change, they're not going to grow. So you see Brazil came from 2,000% inflation when the government was printing money like it was going out of style, and now they're at single-digit inflation, and their currency is quite stable. So, I mean, what they've done is adopted a philosophy that really was espoused by the U.S. originally. The U.S. really showed these countries the way, and they have now emulated the U.S., but unfortunately, the U.S. may be going in the other direction.
You're a China bull still, Mark? Do you at least acknowledge that maybe there's potential for bubbles down the road, maybe, or mostly manageable?
Definitely. I mean, there's no question there are bubbles in parts of China. For example, the property market along the coastal cities, prices have gone up too far. But in the interior, that has not been the case. So you really have to look at these countries as different parts in different regions to really understand what's going on and not panic and say, oh, God, China is in a big bubble and therefore we've got to get out. Of course, there's been a huge correction, as you know, in the Asia market in China. And we are still quite bullish on what's going to happen to that country, and India, and Russia, and Brazil, Turkey, here in Poland. They're making very good reforms. So there are lots of exciting things happening in these countries.
All right, that was Mark Mobius of Templeton Asset Management on why he sees emerging markets outperforming the U.S. as well as Europe.